Hey everyone, I recently came across a very interesting transaction where top institutions have invested in a company on 3rd September that include names like HDFC, Aditya Birla, Sundaram, Society General, ICICI Prudential, Small Cap World, Goldman Sachs, Citigroup, New York State Teacher Retirement and Morgan Stanley. That really intrigued me to study the company and I found it very promising. In fact, after a long time, I've added this company in my next multi-bagger series. In case you are new to this, do check out my previous videos in this series. So the company that I'm covering today is a small cap company with a market cap of around 4,500 crore, but company is a leader in the domain with 25% market share in the entire sector. Plus it's a tech-driven company with high profitability. Okay, company name is Medi Assist. It's a recently listed IPO on January this year. So basically, Medi Assist is largest TPA in the entire Indian health insurance sector. Now I'm sure many of you would not have much idea about TPA. So in this video, we'll discuss the business model of Medi Assist, where we'll cover the role of TPAs. Then I've done a SWOT analysis of Medi Assist, where I've discussed its key strength, weakness, opportunity and threat. But before we discuss further, please note that this video is only useful for long-term investor and my intention is just to share my knowledge. It's not a buy-sell call. Alright, let's get started. So Medi Assist is basically a TPA. TPA stands for Third Party Administrator. TPAs basically act as a link between an insurer, health service provider, that is an insurance firm or corporate in case of group policy, and healthcare providers like hospitals. Now before we discuss further, you should understand why is there a need for TPA. So the idea behind TPA was simple. Insurance companies wanted to focus on their core work, which is premium underwriting, new product launches and marketing of insurance products. Now obviously it's not about selling health insurance. There are many administrative roles like claim processing for health insurance policies, resolving customer queries, fraud detection, that is whether the claim is valid or fraud, then process automation, as well as network management between hospital and insurance firms. That's where insurance companies decided to outsource this work to TPAs against a fee. This fee is mainly dependent upon the premium collected by the insurance firm. It helps insurance companies in improving efficiency and reducing cost while providing valuable support and assistance to policyholders. Obviously today there are millions of people with health insurance and it's very difficult to manage those customers as well as identify genuine claims and process those claims. Plus there are various health insurance plans with customized coverage. Then group health plans are also growing at a fast rate with corporate offering health insurance to employees. Then there's a vast network of hospital, path labs across tier 1, 2 and 3 cities. Then there's a fast adoption of online health insurance purchase and claim submission. So it's not easy for insurance provider to manage all these complexities. That's where TPAs like Medi Assist add a lot of value. Another very important role of TPA is neutrality. Now think about it. If you take health insurance directly from the insurance provider, then at the time of claim, the insurance provider can get biased as it would put a dent in their profitability and can reject your claim. That's where TPAs add value as a neutral party. They understand the claim and figure out if it is genuine or fraud. If the claim is genuine, TPAs help in getting that claim passed, including the cashless claim. Now typically, health insurance is of 3 types. First is your individual health insurance, where an individual directly take a health plan from the insurance firm. Second is your group health insurance, where a corporate house takes a group health plan for their employees. Third is your government policies, which is mainly for lower income segment. Now as per data, government policies have 59% cover in total health insurance as of 2022. Group health insurance covers another 31% of health insurance and individual plan contributed another 10%. However, as per Frost & Sullivan report, by FY28, government policies cover would reduce to 50%, group insurance would become 42% and individual policies would be around 8%. So group health insurance is the fastest growing segment among all 3 and that is the biggest segment for TPAs. By the way, many insurance firms have also got their own in-house division that manage the TPA work, but that is more dominant in the retail policies. So there are both dedicated TPAs like Medi Assist as well as insurance firms have their in-house claim processing team. This slide shows total health premium serviced by TPAs by type of retail and group policies as of 2022. Within group policies, 62.3% premiums are serviced by TPAs and 37.6% premium are serviced in-house by insurance firm. For retail, 32.5% is with TPAs, and 67% is serviced directly by the insurer in-house. Here you can see that TPAs are more dominant in group health plans. Now this is also a very important discussion that can insurance companies with their in-house administration pose a challenge to existing TPAs? So there's certainly a rising competition from private health insurance players where they are setting up their in-house team for TPA work. However, dedicated TPAs like Medi Assist would continue to play a crucial role in the healthcare ecosystem because of multiple reasons. First big reason is cost advantage. Processing claim in-house can be expensive, especially for smaller insurance companies, and this cost could be 10 to 12% of premium collected, whereas TPAs typically cost 3 to 5% as TPA operates on bigger scale with multiple health insurance providers. Even for large insurance portfolio, the cost of in-house claim processing is higher than TPAs. Then second benefit is when it comes to group insurance, corporation would like to avoid the hassle of selecting the insurance provider for the employees and would like to provide a seamless experience to the employee. That's where TPAs add a lot of value. And this group insurance is one of the biggest contribution in TPAs revenue, which is growing at a fast rate. So in my opinion, TPAs would continue to play a crucial role. Now let us discuss a bit more about Medi Assist. So in this video, I've done a SWOT analysis of Medi Assist that would give you a clear idea about its strength, weakness, opportunity and threats. But before that, if you find my analysis useful, you can also explore my weekly video series that include one exclusive video every week where I share my own investment ideas and logic behind that. Plus, I track more than 200 quarter results that help in identifying great investment opportunity. You can get the details on my website or via the join button. So first, if you look at the strength, Medi Assist's biggest strength is it is the largest TPA in the country. Medi Assist is the number one player in the TPA sector with 36.6% market share in group segment and a total of 24.6% market share in overall health insurance segment. Just take a moment to understand the importance of this number. Medi Assist manages more than 25% or nearly almost 25% of country's health insurance premium. That's huge. In fact, Medi Assist market was actually 30.4% and 19.6% in group and overall health policy respectively, but recently it acquired another large player, Paramount, for 312 crore rupees, and hence its market share has increased. Now this has been one of the company's growth strategy where it has consistently acquired many players in the segment over the last 7-8 years. It is possible for Medi Assist to acquire these companies because Medi Assist is a highly cash-rich company, and that is its second strength, which is strong financial profile. Over the last 5 years, its revenue has grown from 277 crore in 2019 to 635 crore in 2024 at 18% CAGR. However, post-COVID, there's a huge surge in demand for health insurance after rising awareness, and hence, company's top line has grown at 25% CAGR in last 3 years, and company operates on a consistently good margin of more than 20%. Although there is a decline in operating profit in 2024, but that is due to high cost of multiple acquisitions in the last 18 months. Management is confident of taking its margin back to 23-24% level. Company's profit before tax has also grown at a fast rate, especially after COVID. However, in 2024, there's a fall in profit growth because of high acquisition cost. But this acquisition would help the company in future growth. I don't want to discuss PAT because taxation is all over the place that is distorting the PAT. Company has a very high profitability with ROC of 23%, ROE of 19% and negligible debt of 0.06. We'll discuss the valuation separately. Company is cash rich and consistently generating cash from operations. Then third biggest strength of the company is extensive experience with strong network. Company has 22 years of experience in the sector with more than 25,000 hospitals in the network with long-lasting relationship with marquee customer. In fact, Medi Assist currently works with 27 out of 28 insurance companies in India and 21 out of 28 insurers use their network to process claim. Then its fourth strength is scalable tech-driven business model. Medi Assist is a technology-driven health insurance company. It uses latest technology like artificial intelligence, machine learning to manage the operations at scale with high accuracy. That include your claim processing and settlement, fraud detection, providing custom health insurance and so on. And this is one of the biggest strengths of Medi Assist that makes it number one player in the domain. Also, company has got access to millions of customer data that can be gold mine to put analytics and generate very important insights, especially for premium underwriting or building customized products. Then fifth strength is highly experienced leadership team. Medi Assist has a highly experienced promoter and leadership team. Dr. Vikramjeet Singh Chatwal is the chairman of the company. He holds a bachelor degree in medicine and surgery from Jawaharlal Nehru Medical College, degree of Doctor of Philosophy from National University of Singapore, master's degree in business administration in international management from Paris, and a postgraduate diploma in public health administration from Institute of Healthcare Administration, Chennai. Then Satish Mian Gidugu is the CEO of the company. He holds a bachelor degree in technology from IIT Madras. He was previously associated with Redbus, SAP Lab, and Intergraph Consulting. Overall, company has a highly experienced senior leadership team. Next, moving on to the weakness. Although I could not find a major weakness in the company, but one of the problems with TPA model is that there's a dependence on a limited number of clients for business. Top 5 clients of Medi Assist contribute 78% in its business in 2023. The loss of one or more of the client or a decline in amount of business or fee they obtain from those clients could have an adverse effect on the business. Although there is a strong stickiness in their business and insurance firms cannot just switch the TPS easily. Then second, the weakness is companies' revenue and profitability are dependent on the premium under management. Basically, the commission and fee rate for TPAs are set by insurance companies and are based on the premiums that the insurance companies charge to their customer. Now, these premiums can change based on various factors like regulation, taxation, competition that affect insurance companies, and any change in premium can have an adverse effect on the commission and fee payable to Medi Assist. Moving on to the opportunity. First big opportunity is fastest growing health insurance market. Indian health insurance market is still highly underpenetrated, where 37% of the lives are covered under health insurance scheme in India as of 2022. Now 37% is a decent number, but the catch is that majority of people fall under government health policy, which is not very comprehensive. So excluding government policy, only 15.2% population has private health insurance. As a result, 50% of healthcare expenditure in India are out of pocket as of 2021. Yes, 50% people still pay healthcare expense from their pocket. So that is still very high. On top of this, there's a big surge in lifestyle diseases, plus there's a very high inflation in healthcare sector. So the demand for health insurance is only going to increase over time. As per report, retail health premium is expected to grow at 19% CAGR between 22 to 28, and group premium would grow at fastest rate of 25% CAGR during the same period because more and more companies are now offering health plan to their employees. Overall premium are expected to grow at 22% CAGR till 2028. So there is clearly a huge potential in the industry, and Medi Assist being the number one player in the sector is bound to do well. Then second opportunity for the company is government proposal for composite license. Recently, Indian government has proposed implementation of composite license for insurance companies where they can sell both life and health insurance. Currently, regulation prohibits insurers from selling general and life insurance policies to customers through a single entity. That's why there's an individual life insurance company and an individual health or general insurance company. If composite license get implemented, it will reduce the cost of insurance companies as well as reduce their compliance hassle, and they can run different insurance lines under a single roof. Companies can also analyze customer data and offer more innovative products. So this would be beneficial for the growth of entire health insurance sector, and TPS would play a very significant role to handle various process complexities at much better cost. So this would be again a key growth driver for companies like Medi Assist. Then third opportunity is inorganic growth via acquisition. Medi Assist has a great track record of acquiring potential companies to extend their service offering and expand market share. In spite of all the acquisition in the past, company is still sitting on cash of 270 crore in its books. So there's still a lot of growth potential via inorganic acquisition. Moving on to the threat, first threat is private players with in-house TPA offering. As discussed earlier, a lot of private insurance players have set up their in-house TPA that gives them greater control over the entire process, and claim processing can be quicker. So going forward, if more and more private players decide to set up in-house TPA team, it can result in loss of business for Medi Assist. Having said this, as discussed, the cost of TPA operation for insurance firm is much higher, especially for small insurance firm. But yes, growing in-house TPA by private players or even by government entities is one key threat for the Medi Assist. Then second threat is competition from new age health tech and insurtech players. Today there are multiple startups in healthcare and insurtech domain trying to focus on niche segment of healthcare ecosystem to automate various processes by adopting technologies. These companies can offer TPA related work at lower cost, thus creating competition for Medi Assist. Now let us look at final part, that is valuation and shareholding pattern. So first of all, Medi Assist had its IPO in January 24, that is beginning of this year, and it was a complete OFS. Main reason for OFS was company is already cash rich and asset light, so they just wanted to list the company and did not want to raise money. Hence the OFS. Some people have a misconception that OFS are bad. That's not the case with Medi Assist. In fact, Medi Assist received a stellar response from top institution. Both FIIs and DIIs have lapped up this company with total of 40% allocation that included names like Goldman Sachs, Nomura. In fact, Goldman has recently increased stake in latest quarter. And Jupiter India, again a top institution that I track closely, has invested in the company. DIIs also include top institutions like SBI, Canara Robeco, Aditya Birla, 361, White Oak, Kotak Mahindra. Public holding is just 20%. That too 7% stake is with public institution. So weak hands of retail holding is very low. Please note that one of company's top promoter is a PE firm, Bessemer. And recently on 3rd September, it sold stake in the company that got acquired by top institutions like Aditya Birla, Smallcap World, ICICI Prudential, HDFC Mutual Fund, and again Goldman has purchased it. The average transaction price is Rs 612. Clearly, top institutions are finding Medi Assist very promising. Now today, Medi Assist is trading at levels of around 650-660 with a PE ratio of around 57-58. On quick look, it certainly sounds a bit expensive. However, there's a catch. As discussed earlier, company has done multiple acquisitions in the last 18 months, including the latest acquisition of Paramount for 311 crore. As a result, company's cost has went up and margins have reduced to 21%. As a result, company's earning got reduced and resulted in increase in PE ratio. That's why I always say that you can't blindly look at PE ratio number to decide if a company is expensive or cheap. You need to deep dive to understand the valuation part. Company's management has guided that once these acquisitions are integrated into the company, it would be back to 23-24% kind of margin. So once the margins improve, PE ratio would reduce. I think the better reference here is the institution buying price of 612 rupee, which they think is fair for the company. Now you decide if it is worth investing at current levels or not. Please note that Medi Assist is still a small cap company with a market cap of around 4,500 crore and there is immense growth potential in health insurance domain. Medi Assist revenue has compounded at 18% rate in last 5 years and 25% CAGR in last 3 years. Bottom line has jumped by 20% CAGR in last 5 years and 50% CAGR in last 3 years. I think company can potentially grow its top line and bottom line at more than 25% CAGR in the next few years. Considering that, it looks very promising for long-term wealth creation. So in this video, we discussed the business model of TPA industry and its role in health insurance ecosystem. Then we did the SWOT analysis of Medi Assist that included key strength like it's the largest TPA in the country with 36.6% market share in the group segment and a total of 24.6% market share in overall health insurance premium. It has a strong financial profile with top line growth of 25% CAGR in last 3 years, high profitability, almost debt-free company, high cash generation. Then company has more than 22 years of experience with a strong network, has a scalable track-driven business model and a highly experienced leadership team. Then weakness included dependence on a limited number of clients for business and revenues, and profitability are dependent on the premium under management. Opportunity is massive where only 15.2% population has private health insurance, plus there's a big surge in lifestyle diseases and high inflation in healthcare sector. So there's a growing awareness to take health insurance. Hence this sector is expected to grow at more than 20% rate in the next few years. Then there is government proposal for composite license that can be a game changer for the industry and TPA like Medi Assist, and company is also growing via acquisition. On threat, private players are also increasing their in-house TPA offering to gain more control and there is competition from new age health tech and insurtech player. Overall, you can think of Medi Assist like a CAMS of mutual fund industry. If you want to play the mutual fund theme, rather than picking an AMC for investment, CAMS can be a better proxy at manages more than 65% of industry AUM. Likewise, if you think that health insurance has a great future in India and want to play the health insurance theme, Medi Assist is the best proxy for that, where it manages nearly 25% of market share of overall health insurance premium in India. Even the shareholding pattern suggests top institutions are quite bullish on the company and recently many institutions have invested at 612 rupee. So this is it for this video. Now tell me in the comment what is your take on Medi Assist. Is it worth investing in the company or not? I hope you'll find this video useful. I'll see you next video. Till then, take care.